Hello and welcome back to Coinscrum's Meet the Founders. We're joined today by David Nicol of LedgerEdge. Welcome, David. Great to have you.
Thanks, Oscar. It's great to be here.
Perfect. So to kick off today, I'd love to get a little bit more context about your relatively new company. So could you tell us a little bit more about your background and what your previous life was before entering the DLT world, actually?
Yes, absolutely. So LedgerEdge is a new ecosystem for corporate bond trading. We're using distributed ledger technology to totally transform the way the secondary market for corporate bonds runs. Before LedgerEdge, which was founded about a year and a few weeks ago, I worked at R3, the blockchain technology company. There I was working really closely with a ton of wonderful people. I was specifically looking at capital markets product management. I was working really closely with David Rudder as well, and that's where the idea for LedgerEdge came about.
Perfect. Okay. And I mean, just to close the loop a little, I guess, on what you've just said, how did you get to digital assets at R3? Because I think you were doing some work around the blockchain space at IBM, right?
Yeah, it was a great launch into the DLT world at R3. Before R3, I was at IBM. I was working in Watson Commerce, running a portfolio of tech companies, primarily in fintech, and we were looking at payments, settlement, and a few other use cases. Again, specifically looking at Watson and AI technology. We started looking at the opportunity for blockchain, and I put forward a lot of new ideas, and eventually found that I could realize a lot of those at R3. And I was really lucky to work with so many great people at R3. We had some amazing projects in looking at the cash and settlement space, which is now completely exploded in a good way in the CBDC projects that are running. We looked at digital assets and the full life cycle of different asset classes, such as those at the Swiss Digital Exchange and a few other great DLT-based issuance and settlement platforms in different asset classes. And it was there that we started looking at the corporate credit market and thinking, okay, why is it that 70% of trades still go by the phone when there's so much innovation happening in other asset classes and in DLT space in particular? So yeah, it was a wonderful entry into the digital asset space at R3, and I was really fortunate to be able to work with so many great people.
No, great intro. So you mentioned working with great people. So who do you have on your team now? Is there a lot of people from R3 that have joined you in your new venture? Because it sounds very linked to the R3 ecosystem.
Yeah, LedgerEdge is a fully independent company that we started a year and a few weeks ago, and it's been a strange year to build a company, but it actually has its positives and its negatives, despite the fact that it's been a very difficult year for very many people. The team at LedgerEdge actually involves no other R3 folks, so it's just me. Okay. From R3. But however, we do have some wonderful team members on the LedgerEdge team who have joined us to start building the system, start sharing it with the market, and of course deliver it into production in September of this year. We have Tim Cook, who is former head of international business development at a company with a very similar name, but a different market. That company was LiquidityEdge, and that was working in the US Treasury space. We have Ian Chicken, who's a seasoned COO and someone who has launched more electronic venues than perhaps anyone else in the market. And he's been there since day one, and he's been wonderful. We have Bob Bose, who's a CTO, who's run both really big projects at banks and institutions, as well as the startup space. And we're joined by about 11 other great people. We have a team of 15 now, and they are the best team in the business, absolutely.
Great to hear. So I understand now that you're fully independent, but I think if I understand correctly, you were part sort of backed or co-founded in some shape or form. I'm not sure what exactly it was, but with David Rudder, who's CEO at R3, right? I think there's some connection there. Could you elaborate a little bit more on that?
Sure. David is our founder and primary backer, and it was really the idea came about in discussions with David. And this is where we started looking at the corporate bond space and wondering why it's still so inefficient, and how we could improve the mobility of assets across the space, and also take advantage of all the innovation in the blockchain space with new primary issuance venues, new settlement methods, and new ways of managing assets all the way through the life cycle. I took the idea to David and I said, I think the time is now, and I think we should start this company. And he's a serial entrepreneur in the space, and he's been bringing innovation into capital markets and even into credit markets for the last 10 years. And I think that this particular idea with LedgerEdge was only able to be developed, only able to be started because DLT technology has reached a certain point in its maturity where we can now build on it with lots and lots of confidence and run it at the levels of throughput and update frequency and security that's demanded in institutional and regulated markets. So that was where sitting down with Rudder, we said, yep, let's go ahead and do this. And it's been a wonderful partnership. He's been a huge influence on myself and on the whole team. He's also been massively helpful in advising us on how to get a new company off the ground, something he's done a few times. And then finally, he's brought on in more banks and asset managers to platforms than perhaps anyone else in the market. So that's also been great to have his advice in doing.
No, it makes sense. I mean, he sounds like the ideal person to have when launching a new company in your space. Mm-hmm. So thanks for all this background on the company. It's really interesting and great to hear how you had the idea germinate whilst you were R3, but you're still very independent and addressing a specific sort of market segment. Mm-hmm. Tell us maybe a little bit more about the product. On your website, you refer to the LedgerEdge Ecosystem. Mm-hmm. So to me as a layman, I'd assume that's probably a multitude of products, or how do you qualify this ecosystem and what makes it up?
Yeah, the LedgerEdge ecosystem is how we describe the new ecosystem that we're building with LedgerEdge. The way that LedgerEdge works is that it's a single product. It is an ecosystem. It allows any two users to interact with each other on a peer-to-peer basis through nodes in a DLT framework. So that means one user can search the market for liquidity, for trading opportunities, can find a match with someone else on the other side of the market, can engage with that person and get a trade done, all without giving up ownership of the information that they bring into the market. We at LedgerEdge, we set out this framework where users own and control the data on their nodes, which actually sits in vaults, which we, the market operator, don't see or monetize or take. Users then engage with each other through all the same protocols that they know and love today: searching, click to trade, negotiations, etc., all the ways that bond traders interact today. And then they're able to execute the trade on a regulated venue. It's in this way that we're using the very best benefits of blockchain and DLT, as well as making it fit for purpose and resilient for regulated institutional markets. It's focused primarily on corporate credit as an asset class. These are bonds that are issued by companies and then traded between asset managers and banks in the secondary market. We've particularly looked at that market because it is a very large market where illiquidity is a painful problem for all users, and where the benefits to having a better way to move assets around the system can have an outsized positive impact on the market. When we deliver this, which again, it will be launching in September of this year, we hope to see many banks and asset managers using it, and we'll look at proving the model out in corporate credit first, and then in the future, we'll look at other asset classes as well, including other digital assets as those come to the fore.
Perfect, really interesting. Sounds like there's a very clear roadmap. So you mentioned the illiquidity pain point in the corporate bond market. How are there any sort of pain points that you're going to try to target within that, or how do you really intend to? You mentioned it's a peer-to-peer system, so you're trying to fluidify the relationship between investors and issuers. But what else are you going to try to solve, or is that basically the $1 million problem that I think is just the one that needs to be solved? Keep things basic.
No, there are lots of of inefficiencies in all markets. That's what everyone works on every single day. In the corporate bond market, it's a fact of life that it's a very big market. You know, when Apple issues a stock, there's only one type of share, and one Apple share is the same as another Apple share. I'm avoiding some other complexities around share classes and special considerations. On the whole, that's the way it works. In corporate credit, Apple may issue debt once, twice, 3 times a year. And so there are many different bonds outstanding for every company in the world, which means that while there may be only a few 100,000 stocks in the world, there are millions of bonds in the world. Now, the variety and the volume of assets in the market, in the corporate bond market, make it an illiquid market on the whole. Because if you're looking for one particular asset, I might be looking to sell a different one. And even though we have nearly the same interests, we don't meet. Now, one of the big problems in the market is that problem is made even worse by the fact that users today, when they go in to get a trade done, the price moves against them immediately because they put their order out there on the market, everyone sees it, and immediately the price moves against them because it's so illiquid that when someone comes out with an interest in a particular direction, in a particular asset, that the market quickly realizes that it's all moving in one direction. Alternatively, users have the option to get on the phone or get on a chat message and try to work an order, find someone who can buy or sell the asset that they're interested in using other kind of less advanced, less technical means. That's wonderful and it can work really well, but it takes lots of time and effort, and so it's really only worth it for the very largest trades. There has to be something in the middle, and this is where LedgerEdge comes in. We want to solve the problem of users holding back information. We want to give them the ability to share more information with the market, but only with parts of the market that they want to see that information. Likewise, we want to give them ownership and control of that information so that they know their data isn't being taken and resold elsewhere. We think that this 1-2 solution will be the next generation of technology that supports the bond market. Because it's not to say that there are no electronic venues in the bond market today. Today, just over 30% of trades go over electronic venues. That is in the U.S. market, and some of the largest electronic venues in the market have done a really good job of moving everyone into a more digital future. However, they're all using technology that is 10 or 20 years old, and it all centralizes data and liquidity in one single point owned by the market operator. And what we're doing is we're distributing that information, decentralizing that control, and giving users full ownership of what they bring into the market. And this is really why it's DeFi for institutional and regulated use cases.
Mm-hmm. I like the link at the end. So very interesting. In terms of then how this is being built as an ecosystem, I think you refer on your website that you're being built by the market or by actors in the market. So, and to build such a successful ecosystem, I think it requires quite a lot of buy-in. So, how have you guys gone about it? Have you co-built some of the infrastructure with market players, or are you going to try to create a consortia, a bit like R3? Could you explain a little bit more about that?
Yeah. In this market, it's critically important to understand all sides of each trade, and that means buy side, sell side, and new liquidity providers like non-bank liquidity providers and ETF market makers, more algo-driven, tech-focused firms. What we did when we started LedgerEdge is we put the design into place, and then we took it out to the sell side first, because we think that market structure is really important, and it is still the case in most trades today that the sell side is on one side or two sides of a trade. And we don't see this changing. We think that the nature of banks as service providers to their customers is such that they have better data and better talent than perhaps anyone else in the market. Now, I think there's a healthy competition there, and I think that we're working with lots and lots of very intelligent and very savvy buy-side firms. But truly, it is the sell side that today accepts most of the trades from the market and then pushes them back out, pushes the assets back out. And it's that cycle that we think will continue. So we started with working groups with the sell side, where we ran 4 working groups with 18 different leading global banks. We reviewed the entire product overview. We asked, what would need to change, what they thought about it, and they thought it looked great, but they wanted to be able to stream prices directly to their customers and trade in a disclosed fashion, as in not anonymous. So we've added that into the product, and we now have tremendous support with the sell side as a whole. We then went into working groups with the buy side, where we worked with 21 leading global asset managers, everyone from the very largest assets under management to the more boutique and specialty houses. And we did the same process with the buy side. And there, they said they loved the platform. They loved how quickly we were able to develop it. And they said that they'd really like to share their portfolio, some of the things that they hold with the market, so that they can see more color, see more information on the things that they have in their portfolio. So we've added that in as well. And we're now going to market with a really good group of market participants on the buy side, the sell side, and those non-bank liquidity providers. As I said, we're launching in September, and we're already onboarding over 20 firms. So we think that it's really important to engage with the market before you spend lots of time and money building a product, to understand what the user really needs, to build for what that user is really trying to do. This is just core product management stuff, and then deliver on your promises to those customers.
No, I think that sounds like a very sensible customer acquisition strategy as well, that's integrated in the product development. So fingers crossed for you guys come this autumn. So you already mentioned your strategy is very much targeting the sell side clients. I was just thinking back to when you said people are going to own their data. Is there going to be some sort of secondary, or maybe you call it tertiary market around maybe someone's going to want to buy more information, especially if you're limiting access to data? Can I buy rights to access a bit more data than the other buyer? And will that potentially be a new opening?
Yeah, what a good question. We're focused on the sell side as well as the buy side, really both parts of the market. And so it's we really need to make sure that we understand and build for each market participant's needs. The question about the future market for data is really important, because it's only now that users on both sides of the market are thinking about their data as an asset, and they're being asked by their firms, and they're seeing the value, but they're being asked by their firms to value their data, to think about what's being put into the market, and think about it as a real core asset of the firm. And what we're doing in a data market is, again, instead of centralizing control of data with the market operator, with LedgerEdge, we're allowing users to share that with others on a bilateral basis, on a peer-to-peer basis. Now, in the short term, that will be used to help them get trades done, help them do what they're trying to do in the market. However, going forward, we'll be incorporating a data marketplace where the system values data contribution into the marketplace. It values data extraction from the marketplace, and it figures out who are data contributors and who are data consumers. You can then combine that with analytics on what type of data is the most valuable in a given trading day, in a given trading context, with trading behavior. Who's doing lots of searches just to pull data out versus who's doing lots of searches to get lots of trades done, and then other analytics to value that data contribution. What we'll then do is put an economic model onto that data contribution and consumption, such that when users are interacting in the marketplace to get trades done, they will also be thinking of their data as an asset, which is really truly valued by the system. This will allow users to share and exchange data as an asset directly. So maybe a participant is sharing a price for something that they don't even have and don't even want to trade, but they think they have a good price estimate on an asset that someone else is trading away from them in the marketplace. They should be rewarded if that price is a really good price, and if it's used to analyze that trade. And we're thinking about building this type of data marketplace into the LedgerEdge ecosystem, where users are transacting essentially directly between each other to find, share, and use data with each other.
Really interesting. I mean, just as an off-the-cuff thought, it feels like banks might even want to start employing the social media and marketing analysts, because this sentiment analysis is essentially, what's made the Googles and all that very, very wealthy over the past few years.
Yeah,
But really interesting.
If you think about today, if you have really good data or a very good analysis of what the value of a particular asset is, the only way for you to take advantage of that very good information is to be on one side of a trade. And with declining balance sheets among the sell side community, and with a more constricted mandates on the buy side, it becomes more and more difficult to take advantage of that very good data. And by holding that back, by not sharing that with the market is ossifying. It's getting more brittle, and it's not really helping the mobility of assets. So we think that by incentivizing the sharing of that data and the contribution of that data into the marketplace with a real economic model, it's not goodwill. It's truly a profit-driven motive. We can create a much more vibrant ecosystem.
Yeah, no, it sounds very interesting. So look forward to that. So maybe we've talked about the economic model that would sit above. Maybe talk to us a little bit more about the technologies underlying that, helping you make, enable an ecosystem where people can make these smarter decisions. So you refer to blockchain DLT on your website. You refer to AI and secure enclave computing, which links to the vaults of data that you're going to attribute to your different clients. But how are all these technologies going to work together, and what's your sort of tech stack in a few words?
Yeah, well, we start with a hosted model, which is the future for exchanges all over the world. So we deliver this as a hosted solution to customers. On that hosted solution, we use distributed ledger technology. We use the Corda platform to essentially organize data flows and give users those nodes, those identity points in the ecosystem. That is, we do that to give users that control and that trust that they are asking for, as well as to make the flows of data a little bit simpler, because we can then organize peer-to-peer data flows quite simply using Corda's application technology. Then with Corda, we also are planning to use two other pieces of technology. One is that secure enclave computing, both in the vault where a user's data sits, as well as in the computation around the data marketplace that I talked about. This is both of these things are roadmap plans, so I'll reserve the right to make that more specific in the future. But then finally, I'll also add that in our running market, we'll use artificial intelligence to both score the data contributions, as I described earlier, as well as help users find other sides of the trade. So we'll use artificial intelligence to advise users on how they could improve their order so that they can find a match more easily.
No, it makes sense. Thanks for all that information on the technology aspect. And maybe moving to my next question on, your ecosystem, your technology, and how that specifically compares to other actors in the market. I did a bit of research before this. I saw that some of the large banks have been trying to create their own products out of sort of fintechy companies coming out of them. So SocGen has Forge, I think. Nomura's, refers to Boostry, and I think another Japanese actor, MUFG, have a Progmat service. How different are they to you? And if they're not the same, how do you intend on working with them?
Yeah, this space is so exciting because there is so much innovation, and it probably speaks to the complication of the workflows and the complication of corporate credit as an asset class, that there is so much that can be done in this space. Those three examples that you spoke about are wonderful examples of innovation in this space, and there are other similar startups as well, being very, very innovative. They're primarily looking at the primary issuance process, the ability for an issuer to connect directly to investors, or to connect to investors through the necessary service providers like banks and legal providers. I think it's wonderful, and there's so much happening in the primary market. I would also add folks like Agora, who are looking at primary market issuance. we're different in that LedgerEdge is an ecosystem for secondary market trading. We're working primarily with assets that have been issued, and those could be both, bonds that are outstanding in the market today, as well as those digital assets, which will be issued onto blockchain platforms today and tomorrow and into the future. I would also add that, other ways that LedgerEdge will work with innovative startups in the space is that, yes, we use fairly standard clearing and settlement mechanisms today. And going forward, as settlement assets and new settlement methods become more of the norm in capital markets, we'll be able to integrate to those solutions to give users flexible settlement solutions, whether they want to settle T+2 or T+1 or T+0, all delivery versus payment. That will be left up to those users to negotiate or to set as part of that interaction in the trade lifecycle. And I think that's what makes the LedgerEdge ecosystem concept so exciting, is that we have the ability to work with primary issuance parties, to work with settlement vendors, to allow users to manage their asset all the way through its life cycle through legacy custody providers or through new digital asset service providers. It's really because we're building from scratch and because we're building on this next generation of technology, we have this opportunity, which most competitors in the market don't.
No, that sounds very interesting. So you're referring about the future opportunity. Earlier you referred about your roadmap as well, and you're obviously gonna adapt to the demand, which is completely understandable. But what's your current roadmap look like? First of all, what's the timeline? Are you able to project yourself far enough, or do you think there's going to be far too much innovation in the short term? And what do you hope to accomplish as a company? Do you have any sort of targets, personal targets even as a company?
Yeah, we are very excited about the future. We'll be launching in the UK as a multilateral trading facility in September. We'll be launching in the United States as a broker-dealer and likely an ATS in January of next year. And then we'll be launching in the EU as a multilateral trading facility later on in 2022. Those three launches are quite critical for us, and we'll be launching with the ability to trade corporate credit in any of the protocols that are most popular today, click to trade, streaming quotes, negotiations, RFQs, etc. Going forward, we'll look to address some of the most tangible solutions, the most tangible and painful problems that the market's suffering from today, including building a better way to do portfolio trading. That will be one of our first releases. And then, of course, implementing our quantified market activity product in more and more detailed and more nuanced ways over the next year. I would also say that, LedgerEdge is most relevant right now for those slightly illiquid assets. That's why we saw the big opportunity. However, in the next year, we'll also be launching a more central order book model for those more liquid assets. In that model, we'll be looking to work with partners to reward those who have the best prices in the market, so that it incentivizes really high quality participation. Now, all of that will be wonderful for the next year or 18 months. And beyond that, LedgerEdge has a long-term plan to be the ecosystem for secondary market trading for DLT and blockchain-based assets. We truly will continue to develop as really DeFi for institutions and regulated markets. And we think that's our edge, because we can deliver very, very quickly. We're building on the next generation of technology. And so we'll be able to provide a venue for trading of, yes, corporate credit today, but perhaps other assets, leverage loans, other digital assets in the future.
Mm-hmm. No, that's great. So you've made a few allusions to digital assets, DeFi. We've seen this parallel world slightly explode in popularity, and you said essentially it's going to be part of your eventual roadmap, which is really exciting to see. And also, as you mentioned, the Corda sounds like it's going to be a base platform for you guys. How do you see you guys working with this market exactly? How I guess more from almost a technical angle, how are you guys going to work with them, or are you going to try to create again a secondary market that would be a secondary layer from the public blockchains?
Yeah, great question. DeFi has certainly seen a lot of popularity, and we've seen this over the last 5 years. And I think it sees a lot of interest from retail traders, especially in more cryptocurrencies. LedgerEdge doesn't have any plans at the moment to issue any cryptocurrency products. However, we do intend to take the innovations of DeFi and really make them fit for purpose for institutional and regulated markets. You know, that means decentralizing control and ownership of information to the users of the marketplace rather than the market operator, as one good example. You know, the corporate credit market will likely, in at least the near term, be will be focused on institutional traders, and that's where we're focused as well. I mean, this is for institutional asset managers and sell-side banks and ETF market makers, and so what they want is certainty and control and the ability to get more done in less time and with less effort, because they have more and more demands on their time and energies today. So we'll continue on with that. And then going forward, you know, as that client segment, as that group of customers that we have becomes more interested in other product types and other asset classes, then we'll have a very strong framework, a very strong ecosystem to allow users to trade those as well. Again, with all the same institutional and regulatory requirements satisfied as we have with corporate credit.
No, that's great. So it sounds like we have to wait for regulation to catch up, at least for the retail thing. It's interesting that, you know, there's the two parallel worlds working alongside each other, and it's great that you're able to at least extract their innovations and bring it to the institutional world.
Yeah.
David, it's been an absolute pleasure to have you today. Really appreciated all your inputs and on giving us a bit more insight into LedgerEdge. Thank you for joining us, and hope to speak soon about the milestones you hit on your roadmap.
Thanks very much, Oscar. I can't wait to speak again. Thank you very much for all the time and your excellent questions. I look forward to being in touch soon.
Thanks.
So yeah, bye-bye.
Bye-bye.